Shadim Shari. All right, let's circle back into some semi play that I think could have a nice bounce between now and the end of the year. Of course, I own QRVO. I talk about QRVO. Small position. I will look to add for sure. Selling put spread down here at 70 and below. Not a hard thing to do. Let's take a look real quick. QRVO. Let's go up next week. Okay. It's only have monthly option, so next week it is so 70 67.5, not a bad potential play. Maybe get 35 cents out of that. I like that kind of risk and return, risking $250 to get $35. I like that kind of bet. All right, so yes, for me, I also would look to buy some share or add to my small position here. It does look good. It look as it basing. So that's one. ASML, which I said is the one semi equipment maker that I like compared to say AMAT or Lam Research. I already did a video for those like a week ago or 2 weeks ago. So I'm just circle back to what I think is a good buy. I like ASML here. It filled the gap. Okay, as ugly as it is, it did fill the gap. And let's take a look at options, see what we have. We have weekly option. So next week, let's go out to next week. All right, let's go back to the chart to see where we are. Okay, so the gap fill was filled at 658-ish. Let's see what the juice is for something below 650. Okay, 650. A lot of juice. All right, I like it. It's juicy. It's juicy juice. Is that a gum? Juicy juice? If it is, I remember it's like a yellow color, right? Juicy juice. I think I love it when I was younger. I have not chewed a juicy juice in a long time. Plenty of juice here. What would be a good one to play? What would be a good one to play? Right. Certainly, a 600, 595 is pretty safe and likely to get you 40 cents. I prefer to get 60 cents or better, right? For those that know me, I talk about how um, at least a 50%, a 10% premium on the spread would be ideal. So when you look at like a spread, like a $5 spread, that means that you are risking $500 of capital. Ideally, I like to see 50 cents or better kind of premium, and you're not going to get that. Okay, you're not going to get, right now you're looking at maybe 20 cents. Now if you move up the risk spectrum, that changed to say 30 cents almost right here, right? And then so the way I look at it is I go up the risk spectrum to see where I get that 50 cents, and no doubt right here, you see this 615, 610, yeah, you start to get that, right? So that's based on yesterday closing. Now can it change? Absolutely. This is where often when I have a credit, or doesn't matter if it's a debit, a bull spread or bear spread, sometimes I don't get the order to trigger because I base it on, of course, the closing price of yesterday or the last trade of the previous day, and depend on what the stock or the indices did, it might not work. Okay, but for me right now, 615, 610 That works. Now, is that too risky to do a 615, 610? Let's go back to the chart. I don't think so. Okay, 615, 610, I don't think so. I like it. To me, that's worth risking $500 of capital to get $60 of premium. I take that trade, all right? Because you get the channel to protect you. You get the low, which let's go 3 years and see. Is there okay? So there you go. The reference row, as far as where else can it go, down here. Okay, down here. If you want to type in now, if it fell out of the channel, this is the area of support. Make sense? Yes, right? Because look, it came down, it broke down, it's trying to get up, it's trying to get up, it's trying to get up, it failed, it break through, becomes support, beautiful, right? That's a beautiful zone of resistance and support, clearly. So if you're willing to take less risk and less credit, then go lower, right? You're not gonna get much of anything, like 590, 580. Yeah, it's not enough. There's no way. Okay, you just can't. So I am willing to take that 615, 610 if I can get 60 cents or at least 55 cents. All right. So that's how I would play it. I like that. I like that kind of risk reward. Get me 10% return on my capital on a 1 week trade. I take it. Right. All right. Let's move on to the last one. SMCI. Woo, that was ugly. They came out with somewhat of a report, and they also issue. You can read it, okay? You can read it yourself. You should read it, okay? My advice is be careful. Accounting problem can be very serious, and I don't know, okay? I'm not gonna make any kind of judgment that, oh, this is a definite terrible. It's not. It's not. Is it fixable? Yes. Question is how long. Okay, so you already get the 52-week low here. It fell out of the channel. You know how I feel, right? It got back inside the channel. Not a bad thing, right? So now I think it is at the point where I wouldn't mind playing options. November is have monthly option only. So here we go again, right? Is there enough juice? Is there juice? Okay, so you're talking 20 and below, right? 20 and below. There you go. So would you do 20 and 18? Yeah. A 20-18 put spread will get you, okay, right now 20 get you roughly 50 cents, 18, 30, so you get 20 cents, right? There you go. That's a 10% premium return that I'm looking for. You're risking 200 to get $20. Not a bad trade, right? I like that. Now let's see what's 19. 19. This is even a safer play that I would do. So look, 19 and 18, a $1 spread, which is a $100 risk. Assuming that I can get the same last trade, it's 12 cents. I do this a lot on a lot of play, right? Lunch money. That's when you hear me talking about lunch money, it is about this area of premium because it literally costs, for the many places, unless you go to upper level, but as far as fast casual, Chipotle, McDonald's, Yeah, you can get lunch for $10 or $12. So there you go. To me, if you want to play safe, 19, 18 put spread next week, next Friday for $12. Take it. I take it. You should take it. We all should take it, as Oprah would say. All right, people. It's Friday. Good luck. Let's close out the week on a high note.